Our next guest stresses the importance of standing apart from the investing crowd, and joining us right now in an exclusive interview to discuss his latest memo. It's titled "I Beg to Differ," is legendary investor Howard Marks. He's the co-chairman at Oaktree Capital Management. Howard, it is great to see you. We've all been trying to make sense of what has been a crazy market with seems to be a very difficult economy to project where we're headed. You've always sort of had a contrarian view about everything. So what are you thinking about right now in terms of where we actually are?
Well, my main contrarian view is that, unlike so many others, I don't know where we're going. It's hard to know precisely what the economy is going to do, what the Fed will do, what recession that will bring on. And, when there's nothing clever to do, don't try to be clever. I think we're in normal territory in terms of risks and opportunities, and Oaktree is operating in its normal fashion, neither exceedingly aggressive or exceedingly defensive.
So when you say that you don't know what to do, and what are you supposed to do when you don't know what to do?
I think you do what you normally do, which is you buy things that appear attractive in terms of a return that more than compensates for the risk. That's what we always do, and sometimes we get much more aggressive, and sometimes we get much more defensive, and this is neither of those times.
One of your more contrarian views has been to get bullish, I think, at least individually, on certain stocks in China, given how unloved that part of the world has been. What do you make of what's happening right now between China and Taiwan? We were talking about this news even just in the last 24 hours around Nancy Pelosi's trip. There's obviously so many stocks that are on lists to get delisted. Do they still look like good deals to you now?
Well, we operate in China mainly through the credit markets, so I don't have opinions on individual stocks. But, I've made my career based on things other people wouldn't do. Today, China is described as uninvestable. 45 years ago, high-yield bonds were described as uninvestable. I think that the bargains at any moment are best found on the uninvestable pile. Although that's different, Andrew, from saying that everything on that pile is what you should buy. But I think that a great place to look for bargains is on the pile of things other people won't touch, because they, by definition, their prices embody no optimism.
So I'm thinking right now, SPACs, for example, completely an unloved category. Would you start to look through that pile? If
I were a stock investor, I probably would. Yes.
One of the other big topics that we've been focused on, just again in the last 24 hours, big headline: Kristen Sinema, as you probably saw, seems to be pushing ahead with the Inflation Reduction Act, but as part of that, removing this provision which would have closed what a lot of people describe as a loophole around carried interest. What do you think of that?
I think that carried interest, for the benefit of the audience, means paying long-term capital gains rate taxes on the profits that money managers enjoy from operating funds. My personal belief is that carried interest, capital gains, is what you get when you invest your money and make a profit over the long term. I don't think it's what you get when you invest other people's money over the long term. So I'm not one who bangs the table that the money we make for making profits for our investors is a capital gain.